lost. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
All right, making sure we are live. We are. Am I being heard? I think I'm being heard. All right. Good morning, everybody. Welcome to the morning show. A lot going on today. We have a jobs number. We have earnings. We have three guests. Dean Christians from SentimenTrader. He'll be on in about a half hour or so. We'll have Louis Sykes join us for Crypto Friday, and we have Alfonso who will join us and share his favorite charts. So a lot to get to. Smash the like. Let's roll. Where's my intro? Come on now.
Oh, yeah. Happy Friday, everybody.
Happy Crypto Friday, everybody.
Welcome to the second worst month of the year to own stocks.
Does it always shake out that way, though?
Nope.
I mean, that's the average, right?
It does not, but I will tell you this. Every single turning point in seasonality over the last year and a half, they've asked me the same thing.
I mean, it can't be this good forever, though.
I guess we'll see. Off to a rocky start yesterday. Classic action. People look, oh, what did the market do today? They see the stock market up. Little did they notice that it was consumer staples that were the leaders. And listen, I've studied bag holders for many years of studying bag holders. And one thing bag holders love to do consistently is buy stocks once consumer staples finally become the leaders. Bag holders can't help themselves. They love it so much. So, this goes back to kind of like studying other people, like Charlie Munger turning over to Uncle Warren and saying, rest in peace, Charlie. Charlie turns over to Warren and says, Warren, people weren't wrong so often, we wouldn't be so rich. And that quote has stuck with me. I think yesterday was another good one. People think the stock market was up yesterday.
Did you say he turns over to him? They don't sleep together, bro.
No, but they sit next to each other. On the desk, so he turned over to him.
No. He rolls over and looks him in the eye.
You know that picture of like you and me on the beach in Huntington Beach, and it looks like you and I are looking at each other and we're about to make out. Like, that picture? Like that, but with Warren Buffett and Charlie Munger.
Got it.
And more gray hairs, right? You and I were still young. We're looking good. We got our hairlines going. You know what I'm saying?
Look great.
Strazza's starting to get some gray hairs. Are you starting to get them?
Well, I was on here yesterday. My hair was looking all like funny in the morning, and I'm like, my hairline's really receding.
Yeah.
My girlfriend points out the grays. I don't see them. Apparently, there's some on the back though.
I got them on the side here. I'm getting them on my chest now. No big deal.
That's cool though.
No, hey,
I look forward to some grays on my chest. Yeah.
Spencer's like, can we move on?
Happy Groundhog Day, by the way, everyone.
Happy Groundhog Day. Did he see the shadow or not? Or is that later today? What time is
the result is in. We have an early spring.
Early spring. That's definitely not bullshit at all.
I don't know.
Rachel,
Tony Phil. Cheers.
Can we talk about the market, please? Hit that bumper.
Yeah. Hold on.
Yeah.
On your first point, though, there were 18 articles written about the January barometer, I think, this week.
As January goes, so goes the rest of the year, so buy stocks.
But there were none written about the seasonal weakness that we're walking into here in February.
Oh, what does that tell you there, Mr. Strazza?
No, I just thought of that as you were saying that. You're right.
No, Strazza, you're 26 days too early. Oh, wait, 27 days? Is this a leap year? 27 days too early. Those articles will come at the end of the month. All right, state of the markets.
Please. All right. Well, nice little start to the second worst month of the year to own stocks. Dow futures down 100 points this morning. S&P futures up 10 handles, a little under 10 handles, about 20 bips. NASDAQ futures well off the highs of the day. And last night, Futures were up, and they've just kind of been really melting this morning. 30-year bond futures getting hit down a full percentage point as interest rates are ripping. Silver down almost 2%, copper down almost 1%, gold down almost 1%, crude oil down almost 1%. The dollar ripping this morning, which tends to happen when stocks are under pressure, so this should be no surprise. And the volatility index spiking up towards 14, with yields trying to climb back above that 4% level. And then, of course, in the old funny money, you've got Bitcoin down slightly, just under 43,000. Happy Crypto Friday, everybody. And Ethereum right around 2,300, flat on the day. Solana right around 100, up 3% on the day. Total crypto market cap 1.6 trillion. Dow down a hundo on this little Groundhog's Day as the second worst month of the year to own stocks rages on.
You know, interesting that rates were getting absolutely killed this week, right? But the dollar held in, just kind of straight sideways, chopping around. You know, so now that maybe that pressure's coming off, bond market rates, you know, kind of really ripping here today. You're seeing the dollar maybe move higher from this little consolidation.
Yeah, why don't you throw up slide 2 there, Spencer? I think this is really the one that tells the whole story. You know, this is something we've been looking for all of last year. It just never came. No rotation at all into consumer staples at all, which was part of the reason that it helped us stay so bullish, buying stocks in the face of, you know, whatever yield curve or M2 or the Powell or whatever these gloom and doers were so angry about last year. We were looking to see what was actually happening, and what was actually happening is that money kept flowing out of defensive areas and continuing to flow into the offensive areas. And now what's been going on? Now we're seeing the opposite. You know, obviously consumer staples had already been outperforming S&P 500, consumer discretionary, industrials, like all of these leadership groups. Consumer staples have now taken over that leadership group. And even though technology was doing well, financials were doing really well, they have also now succumbed to the overwhelming rotation into consumer staples. So again, you know, I'll say it again: go back, study bag holders, study them, so that we don't become them. Right? That's really the idea. Study them, and one thing you're going to find consistently is just how much bag holders love buying stocks when consumer staples become the leaders. Right? You see that time and time again.
So, Jason, why don't you take this question in the chat? This is a really good question here about staples as a strategy during a corrective or a bear market.
Yeah, remember, staples are stocks too. So in bull markets, staples do well. They go up, right? As we saw last year. They just don't go up as fast, right? They're low volatility.
Opposite. The question is, would a strategy for this time, because you're turning tactically bearish, would a strategy for this time be just to buy staples instead of shorting?
Right. So if you would let me finish my thought. So last year, so in bull markets, staples do well, right? They go up. They do. Yeah. They just don't go up as much as the others, so they underperform. In downtrends, in corrections, you tend to see staples also sell off. They just sell off less than the rest of the market, so they outperform, right? So an absolute long position in staples could work, but that's definitely not the strategy we're incorporating at all.
I think the short answer would be no.
Wait, I have a question. I actually almost brought this up yesterday, JC, but we ran out of time. The staples SPY chart. Yes. I don't see that here.
You don't see that here because I'm comparing it to the sectors, because we already know staples have been outperforming SPYs, right? We already talked about that earlier in the week. So this is compared to specific sectors. If you want to compare it to the SPY, look at consumer staples versus tech, consumer staples versus industrials. Those are two good ones.
For me, if I were to pick this chart apart, staples versus discretionary, perfect. You know, that's the big information.
What about industrials? And that's a good one too.
Industrials also great. I don't love financials, kind of play their own game sometimes. I don't like that one as much. And tech, I don't like on a large cap basis. I don't know how defensive or how offensive that really is, right? You know,
the largest components of the S&P 500. You're not sure how important they are?
No. You're missing it. I think there's not the element of risk on or offense to the same extent as some of the other sectors.
Come on, Strazza. These are the biggest companies. What do you mean?
Many would argue Apple, Microsoft, these mega techs are now defensive.
Yeah, and many people are stupid.
Okay, well,
Apple and Microsoft are not defensive names. If people, I know people are saying that. People are thinking that. I mean, that's silly.
True,
that's silly.
Well,
it's true.
They're so widely owned, though. Like,
yeah, there's nothing defensive about that. I would love for you to show me some data that suggests otherwise. I've never seen it.
I couldn't disagree with you more.
Okay, show me the data. Let me see it. Show me where you see defensive rotation into mega cap tech when stocks are under pressure. Show me.
The stocks hold up the best.
All right, show me.
During bear markets.
All right, go show me.
wait, hold on.
I'm doing a show right now.
Can I go back to the Staples SPY thing for a second?
Please.
So, JC, when you say Staples have been outperforming the broader market for what, a week? A week.
Well, we talked about it earlier in the show, and Staples have been outperforming the broader market since it bottomed on January the 24th. So
okay, so a week and a day.
So January the 24th was what? 9 days ago, right? But it's bigger than that. It's the fact that we're now back above those December lows. We discussed this earlier in the week.
Yeah.
No?
All right. Well, good. So where are we wrong on this tactical bear thesis?
Same place that we discussed yesterday. If consumer staples roll over relative to the S&Ps back below those December lows, same thing in high yield versus treasuries, then probably things are probably not that defensive.
Right. So this could end up being a really, really short-term thing. This could happen like today.
Maybe. I doubt it.
Yeah.
I guess we'll see.
Okay.
I mean, I like what is it that's so outrageous? Here, I'll show you the chart, Spencer. What is so outrageous that probably one of the biggest things that kept us so bullish throughout last year is now no longer in place? So tactically, I'm taking the other side. Like, why? It seems pretty logical to me. You can go to the first chart there, Spencer.
And you worry about the move in credit spreads the other day also?
First of all, I'm not worried about anything. It has nothing to do with worrying. What
Keeps you
is
up at
it?
night?
No, I slept great last night. If I'm not able to sleep at night, it's because I'm too big, and I slept fantastic last night. So maybe I'm not big enough. So this is what I'm looking at, Spencer. This is it.
Okay.
And even on a day like yesterday, where stocks were up, consumer staples were leading the way higher, right? Which is not what we were seeing last year. So yeah, this is what. First of all, it has nothing to do with being worried. I'm not worried about anything. I don't really give a shit what the market does. I'm just looking to make money, right? And this is what tends to happen before you get a nice little rug pull.
I like this divergence in opinions. This is good. Let's see how this plays out.
Well, this isn't my opinion. These are just facts. Like Strazza and I are not disagreeing that this is what's happening. This is what's happening. Some people might not like it.
Divergence in conclusions. Then I like that. This is good. No. This is. I'm not. Yeah. This is.
I can't. I don't even know how many times I've said this week here, but we don't strive for consensus internally. In fact, if there's too much consensus, most of the people probably aren't doing their jobs on the analyst team. So we like to disagree. We like to
we push back on each other all the time.
Yeah.
It's all right.
Good.
Usually, in my experience, when you see rotation into defensive areas, after you haven't seen it for a while, after a prolonged uptrend in equities, and it couldn't be happening at a more logical time. Could it be happening at a more logical time? This is when this sort of thing does happen. Like we were talking about in the meeting the other day. My wife got like some fungus on her foot, right? She got like some kind of like rash or something. And she was at the gym that day, like at a new gym that she's doing. She does this bar thing. She says that the instructor is very overweight, so she doesn't feel like she should be going to this. But anyway, the point is, she's like, where did this thing come from? And I'm like, well, you go into this new gym. These sort of funguses, they live in these environments, in these sweaty, kind of dirty environments. Not dirty, but you know what I mean? Like I've spent so much time in gyms over the years. Like I got ringworm when I was in high school, like all these weird funguses. No, but that's just, they thrive in that environment. February, with consumer staples, low volatility, and credit spreads widening, all going into a seasonally bad time of the year and a seasonally bad time of the 4-year cycle, this is where that fungus thrives, right? Like this is where stocks come under pressure. Maybe they won't. Maybe next time she'll go to the gym and she won't get some fungus on her foot. Maybe, but that's where the fungus lives, right? This is where rug pulls happen. Maybe we won't get a rug pull. I have no idea. My crystal ball's in the shop. But what is it? If it walks like a duck and it smells like a duck, it's probably not a chicken.
Food stocks are fungus on my portfolio, no doubt, definitely. Should we bring Louis on here and talk some crypto?
Please.
All right.
Can I talk about these earnings at all?
Oh yeah, we will. By the way, jobs number came in hot this morning, and we got a lot of earnings. But Louis is here. We got a lot going on, so let's bring Louis on, and then we'll do the earnings.
All right.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Here we
go.
I'm a bit surprised to hear about foot funguses on a show about stocks, but
I thought that was a good like comparison. Like this is real life conversation I was having in the kitchen this week. No,
no,
you don't like
it
it?
is. I'm just giving you a hard time.
I thought that was a kind of like a good, would it be a simile? Would it be a simile? It's like that because it uses like or as. It would be a simile. That's
very good. Very good, JC. Wow, I'm impressed. All right.
Take that, Miss Pedraza.
All right. Louis, what's on your mind here?
What's on my mind? Foot funguses.
Yeah.
No. Really, just what's been happening with this ETF, and similar what's happening in legacy markets. We were talking about seasonality, seasonal trends, and so really just viewing the impact that that's going to have on crypto markets. Obviously, the correlation between legacy markets and crypto markets is still very tight, and so it's the case of whether we get a little bit of weakness here into February, which would make perfect sense. So I'm just closely monitoring that correlation there.
Louis, did you see the thing the other week that all these outflows in GBTC was actually just FTX, the FTX estate or whatever? Like
and so I mean the FTX is going to be repaying its customers in full in terms of the US dollar value going back to their when they filed for bankruptcy in November, and so it makes sense. I'm not sure how much were the outflows.
Like a lot, like most of them.
Yeah,
like an overwhelming majority of them. So that was a story for that week was, oh my gosh, all these outflows in GBTC. In actuality, maybe not so fast, right?
Yeah, and so it makes sense that if you've got asset managers that are holding GBTC, whether they're going to continue holding that higher fee product because of tax implications.
Maybe.
Yeah.
Louis, what is the next catalyst for cryptos? Sazo Pro wants to know.
Perhaps the ETH ETF. The first deadline for that is on May 23rd, I believe, from VanEck, and so it could be a likely possibility that the ETH ETF gets approved in May, which is rather soon, actually.
I think I forget what I said. I said end of the year. I forget what you all said when we did the over under on that.
We were looking at like May or June, right, Louis?
Yeah.
I mean, these are just guesses. We have no idea.
Right. We have no clue.
I mean, that's just the first deadline for the VanEck product, and so of course, it's not certain.
Do you think that they're gonna? Do you think that because we already got one out of the way, there's no need for this like consistent like rotation of deadlines, like keep rolling it over like a futures contract?
I mean, hell, look, it took 10 years for the SEC to finally approve a Bitcoin ETF. Is it going to take 10 years to get the next one?
Probably not.
You'd hope not.
No, I mean some common sense. Why don't you talk to me about the flows here? Can I get an update on what's been going on with these ETFs? Who's the big winner? Who's the big loser? What are the net flows out of the Grayscale?
Yeah, and so Grayscale has experienced about 130,000 BTC worth of outflows. I think that's just the data I checked last a few days ago.
These are 130,000 coins?
Yeah, BTC from their asset under management.
How much money
And
is
so
that?
again, to Spencer's point, likely that the majority of this was FTX, which does make sense. But Grayscale is still the overwhelming, significant ETF in this space. They account for just a little over 75% of the total assets under management of these ETFs. And so if we bring up the pie chart that you had up before, Spencer.
Is that 5? Yeah. One sec.
Any day now. You have
Yeah,
one
no.
job here, Spencer.
Hey.
He's got a
slide
lot
5.
of jobs, to be fair.
No,
to him.
There we go.
To his credit. It's not just one, Louis.
There it is.
And so when we look at the Bitcoin ETF market share, this is the assets under management. So I'm comparing the assets under management of all these various ETFs. On the left-hand side, you've got all the ETFs. Then on the right-hand side, you've got all the ETFs X GBTC. So that's the Grayscale flagship product. And so Grayscale's product makes up approximately 3/4 of the total market share. And then when you exclude Grayscale, then you've got the BlackRock product and the Fidelity product that make up about 2/3 of the remaining assets under management. And so it's clear that it's very concentrated who the leadership is within this space. And it makes sense that BlackRock are the clear winners, excluding Grayscale.
Why? Why is that like? Why do you say it like that? Like that they're the clear winners? Like, should we have all assumed that? Is that like not surprising at all?
Are you gonna,
What is?
are you gonna hold your Bitcoin with BlackRock or some, random fund provider?
No, I'm asking. No, that makes logical sense. I guess I hadn't really thought about it like that, but I guess that's logical. Like you feel more comfortable with BlackRock, right?
IBIT is now the SPY of Bitcoin. It's the GLD of Bitcoin. It's IBIT.
And so I've also got another table here that compares like the fee structure of all these ETFs that people might find valuable. And so this is the most up-to-date fee structure of all these ETFs. It's been a race to zero for the longest time because that's really the only point of differential that these ETFs have because they're just repackaging the same thing. So
and to your point, they don't all have BlackRock in the name.
Exactly.
I mean, listen, if you have your account with Fidelity, you probably buy the FBTC. That's fine too. I don't know how ARK and Franklin and Bitwise are going to take any market share though.
But they're not going to go away either, Lou?
I think they do. I think half of these go away.
Mm-hmm.
I mean, Franklin has AUM. Anyway, yeah, it doesn't matter. This list will get called down to a few less.
Okay.
Yeah, whatever.
How about this though? This has been great about the flows. How are we making money in crypto right now? Been going sideways.
I know exactly what you're going to be talking about here, Strazza.
No, you don't. I'm asking you. I'm not talking. I bought Chainlink last night. Hell yeah, let's go.
That's a great chart. I've actually got that chart. Let's pull it up.
Please.
This thing looked
see,
nice.
I knew that you wanted this chart, so I was like, yeah, we need to talk about Chainlink. Look at how beautiful.
I mean, just the relative strength is like off the charts here.
I mean,
do you have a link? Do you have a link BTC chart?
I don't. But if you pulled it up,
what do these guys do?
I don't know. I don't really care. The chart looks nice.
Yes.
You're supposed to know. You're supposed to be the one who tells us. We say we don't care. We need you to care.
Yeah.
Am I going to get paid more money for knowing what Chainlink does?
I don't know. Well, fuck around and find out. We'll see.
That's right. No, listen.
Look,
we're back above those Q4 highs. Like that's not nothing, man.
The fact of the matter is that most cryptos still don't look like this. They're still consolidating. Chainlink's the first one breaking out. The case is to be made to see whether, if we do get some equity market weakness, just very near-term tactical, whether, we're going to get short-term, these breakouts fail in the short term, maybe just a false start.
Okay.
But the fact of the matter is that the risk is defined it's just breaking out of a nice consolidation. You don't want to overthink it.
Yep, I agree, and that's kind of been my strategy.
Yeah, but when Strazza asked, like, what do these people do? It's like, it's more of like, correct me if I'm wrong, Strazza. It's more of like, fuck, what are these people doing? Right? It's more like, what are these guys doing so right?
Broad category.
Yeah.
We're gonna bring back those sectors, right? Like, just is it smart contracts? Is it an exchange? Whatever.
Yeah. Yeah, exactly. And so we're doing a bit of work with that to quantify that, because I think in the equity markets, it's really intuitive. So, well, ExxonMobil is easy. They, are in oil. And so it's...
Well, that's not easy. It's a little complicated, actually.
but if you get these random crypto products,
hold on,
you don't know...
Right? So founded in 2017, Chainlink is a blockchain abstraction layer that enables universally connected smart contracts. How about that? Through a decentralized Oracle network, Chainlink allows blockchains to securely interact with external data feeds. I'm more confused now than I was before.
Right.
What the hell does any of that mean?
Coinbase actually has excellent descriptions. So for each one, you can click it, you can hit read more, and it even has something that's like bulls would say, and it tells you like what the bullish like thesis or narrative is for each one. They have the white paper. Like, I could click Chainlink. You got the white paper right there. It's pretty good. Go read that white paper and get back to us next week.
The most important point for me is understanding how these things trade together. Because to my earlier point, if you've got something like, I don't know, Marathon Petroleum, that it's an energy company, right? So it's going to be trading with most of the energy companies. But if you've got some random crypto project, you're not sure whether that's going to be in a group, whether it's going to be trading with other coins.
Yeah.
And so I don't really care what it does. I'm also care about how it relates to other coins.
This one would fall into the smart contracts sector. So, other ones, Injective looks strong. Celestia, what was it? SEI, still not going though, right? Like you could draw, right. So you have this nice tight little consolidation. It came out of a base. Optimism looks similar.
Yeah.
They're not going yet. It's one of those situations right now. Let me know if you guys agree, where you can almost just start to make a list, right? And as more and more start resolving higher, good. Maybe we get that leg up. Maybe they're not breaking higher, but they're also not really breaking down, right? At least with any solid follow through. So,
and if you do get some weakness, some short-term weakness, particularly into February, you buy that dip. If where risk and reward is defined, you buy that dip. Like Injective Protocol, if we get back down to 20, you take that chance every day of the week.
You didn't get much of a drawdown in the big guys though. What'd you get? Like 20% in Bitcoin?
Yeah. Which to Caleb Franzen was out there tweeting. He's like, that's just normal for Bitcoin.
Yeah,
exactly.
Like you guys are surprised by that, but also we got right to that 47, backed off. Like, I mean, talk about, there's a reason why that was our target. Louis marks it up as 46. I was a 47 guy. He also marked it up as a 30. I was a 31 guy, right? Getting back to, we use crayons here, not pencils.
Exactly.
Even
31 and 47, Lou, come on.
But even some of these alts, and I know Solana is more resilient than the others, but 30% during the last bull cycle, Solana drew down like 60% right in the middle of it, and then just kept rocking. So I don't know.
It's not like volatility is obviously a feature of this asset class, and 80% drawdowns aren't tail risks; they should be core assumptions in your risk assumptions.
Is it a feature or a bug?
80%.
Someone like that. That would blow your shark.
I almost wonder how traditional finance guys are responding. They had the ETF. I'm just wondering. Asset managers they get into this ETF and then it falls into a 20% drawdown. Like crypto people go, okay, that's nothing. That probably makes traditional finance guys just sick in their stomach.
Louis, how about this? We'll find out, right?
Yeah, exactly. They're professionals. They've traded risky assets before.
Yeah, are you kidding me? Once you start getting into some of these, like, more some of these contracts, some of these bond swaps and stuff like that, forget about it.
They do some weird stuff.
Yeah, they're leveraged to the hilt too. Do you only trade on central exchanges, or do you go into degen territory and trade off exchanges? Yes.
I'm a centralized guy. I like more centralization.
JC the junkie.
Exchange
Yeah.
guy. Exchange guy.
No, I like
Guy.
no, I like it when Louis says, "Yeah, you got to go to Uniswap and swap it out."
You're a freak because that stuff's a pain in the ass. It's.
I want to know. I want to know that I have
nervous.
$250,000 in the metaverse somewhere on some chain that may or may not show up in my wallet in 1 minute. Like that feeling of uncertainty really gets my juices flowing.
I mean,
This really sounds like a gambler's mentality.
When you're messing around with your wallet and you're transferring stuff, you'll get like a couple seconds there where it's nowhere.
Yep.
And you just wonder whether you've just sent money into the ether, and you just that anxiety.
Although
I'm trying to call the 1-800 number that they have on there, and I'm like,
in crypto's defense, it's not like traditional finance is that much better. Okay, in this regard, I moved over 401k money from the old. I rolled over to your IRA, and they had to mail a check, and the money was just out there. It was just out there somewhere.
Yeah, but also like,
but it's a check, Spencer. You'll be fine. We're talking about.
It took only 2 weeks. It took 2 weeks.
At least you got
a
a 0800 number to dial.
Yeah.
But listen, what we're talking about, this is why these ETF launches were a big deal. This is exactly why, because there are people out there who would say, even Coinbase, even the centralized exchanges, they would say, no way, no thank you. But then when you tell them, hey, you could own Bitcoin in your Fidelity IRA now, it's like, oh, okay, that's a totally different proposition that you're making to some.
I get a little scared sometimes. Like, I have to convert my CryptoPunk into some other type of CryptoPunk because it's so old, because it's an OG. So in order for me to borrow against it, I have to do something that I'm scared to do because I read an article that guy did it and it disappeared. Yeah. So I'm trying not to lose my punk.
And then you got to pay for the oil and gas.
Yeah, but I could borrow against my punk and then go out and buy Chainlink, for example. Right?
I don't like that.
Why?
I don't like these collateralized transactions that are going on.
It just sounds like you're just like a chimp, just like whacking the button, just like hoping it doesn't break.
Me?
Yeah.
I know. And
I read an article, some guy who did it.
It's very scary. I don't want to lose my punk.
Ooh, I hear you.
It's very scary.
All right. JC, Louis, we're going to let you run, man. It's the weekend for you.
Wait,
enjoy. Yeah.
And one more question before he goes. Did we, just to follow up, did we look into the staking? Is Cosmos the winner? Did you check that out?
I haven't checked it out yet.
Strazza, I want to create a basket.
Yeah.
So how many do you think is right? I was thinking like 5 to 7.
Yeah, maybe 10. But there's not a ton that pay these big ones, and the ones that.
But if we diversify,
but the fact of the matter is that it doesn't really matter what the yield is, because the bigger component of the return is going to be the price volatility.
Yes.
What you're going to find, just like we do in our dividend universe, is that the ones with the juiciest stakes are just
the crappiest coins.
Do we need like yield adjusted prices?
Trust me, I'm finding.
No, but let's do a hedge so that we eliminate the capital appreciation and depreciation.
Then that involves futures and it gets complicated.
I'm okay. I'm here for complicated. I don't know if you've been paying attention.
Okay.
All right. Thanks a lot, Louis.
All right.
He loves NFTs. This guy.
What?
Yeah.
Talking about complicated. You're engaged in the NFT lending business right now.
I've borrowed against.
He's borrowing against his own NFTs. Crazy.
Yeah,
stuff.
but these are smaller transactions. Yeah. I'm trying to do a bigger transaction here.
Let's bring on our guest today.
I'm scared. I don't know what to tell you. I'm scared.
Dean Christians has been waiting patiently. Senior research analyst at SentimenTrader. Tremendous follow on Twitter. X, whatever. Let's get him on the show now.
Please. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Dean.
JC, how you doing?
What's going on?
Dean, turn 90 degrees so you're facing us. Your camera.
Yeah.
No, turn your body. Like turn your body.
We're over here.
Like you're
over here
other
to
way.
your left.
Yeah.
Over here. No,
To
the
your
other way.
other way.
Other way.
Turn to your left.
Yeah, we're over here, Dean.
Let me fix.
I think you got the wrong camera set up. I think you got.
Yeah,
the wrong...
you're on the wrong camera. Just turn your body to your left.
No, I only have one camera, guys. Hold on. Let's see. Let me re-enable it.
All right, let's try that.
Why
That's
is
all
it
right.
showing?
I don't know.
You got a second camera.
Hold on. Add source settings.
There he is.
Oh,
Yes.
Dean, it's like you're so fancy with all your cameras, bro.
Wow, how many screens do you have?
All right, hold on. If I click, is that there? We go.
Yeah, we're good.
You're good.
Sorry, user error, guys.
No, that's all right. I like the side profile. It looks looking good. Looking
Yeah,
looking
makes me look
svelte.
thin, right?
Yeah, I like it.
So Steve and Spencer, you guys know the real reason why JC wanted to have me on, right?
No.
So we could talk Miami Hurricane football, right, JC?
That's right. Somebody wants to talk to you about the Canes. Let's go, baby. What top recruiting class in the country? Top 3? I mean,
There we go. Just so you know, my dad went to the University of Miami, so that's why I brought it up.
my dad went to the University of Miami too. So did my sister. So did a lot of my friends. I grew up in the Orange Bowl in the 80s. So
Good times, the glory days, right? Hopefully they'll be
you're
back to
telling
the
me.
glory days.
it's my childhood, Dean, but my curveball couldn't get me to play there. I wasn't good enough to play there. So they sent me up to the Northeast to freeze my ass off.
There you go.
That worked out pretty well for me, though. So no complaints. What about you? Where are you living these days, Dean?
I'm in Atlanta, Georgia. Hot Atlanta.
nice.
Yeah.
Well, what are you guys doing there in hot Atlanta? Are you looking at some sentiment charts? Is that what's going on?
Yeah, we look at a little sentiment, we look at a little price, we look at a little breadth, we look at everything. So, it's kind of a misconception that SentimenTrader is just a sentiment only research firm, and we're not. I mean, we'll take any data set we can get and see if we can find an edge. So we cover all the topics.
And where do you think the edge lies these days?
Listen, so here's my 2 cents, and this is just sort of big picture. 2022 was a growth scare correction, right? So you can label it a bear market, but it was a bear market without a recession. So what have we done? We've gone right back to the leadership that we had in place before that. Okay. And yes, you had a ramp up in small caps and you had a little period where equal weight outperformed, but the bear market recession playbook that everybody's kind of like leaning on and talking about, we should have this participation and all that. It's not there in the charts. Okay. You could label it sort of a late cycle growth scare correction that was exacerbated by the Fed, exacerbated by inflation. But what I see in the charts is just we're back to the old leadership, which just tells me, the same bull market that was in place prior to 2022 is back in place. Now, look, you can sprinkle in some industrials in there, right?
Yeah.
We've got, the government spending trillions of dollars on building roads and whatever.
What about financials?
And financials, I don't know if you guys saw, I put out a note, last week. Financials look good. In fact, I sent over a graph to Spencer, but financials have the best absolute trend scores of any sector out there.
What up, Spencer?
Even better than technology. So let me just give everyone a little background on this table here. So obviously Russell 3000, I have a trend score. Plus 10 is the best, negative 10 is the worst. There's 10 trend following indicators in there. And, then we can measure what's going on internally with these sectors. You can see, look, positive trend scores. You've got financials with 83%, industrial 72%, and there's tech at 62%, right? Then you can look at see, all right, how many, what percentage is plus 10, and again, you can see that, financials, industrials, tech, they're all up there.
Yep.
So, everybody's got technology on their mind, but, if you look under the surface, there's some really good looking charts within financials and industrials. And then, look, far right of the table, you can see all the trend scores that are plus 10 and negative 10. So, we're in an environment, and JC, I saw your note the other day talking about going out and, sort of shorting the market if, a couple of scenarios play out. Which
we're already shorting the market all week.
Yeah. So look, and I don't disagree. And that's why I put these last 2 columns in there. So within the Russell 3000, you got 284 stocks with a plus 10 trend score, and you got 229 with a negative 10 trend score. So there's plenty of opportunities on the short side with stocks that are in downtrends. So, we're in a position where, look, the market has gone up a bunch. We're starting to narrow again. It's not terribly narrow, which is a great environment for being long or short, various sectors.
So Dean, you're basically saying, the narrow leadership from last year, this mega cap tech trade or mega cap tech dominating, it's the case again this year. At what point, if that persists, and we're talking about this still in June or July, at what point do we start to worry that breadth hasn't expanded in the way that it should to support a sustained bull run?
Well, again, if when you think about market cycles, there's kind of 3 to 4 main drivers, right? You got inflation. All right, well, that's come down. That's good. Yeah. You got interest rates. Okay, well, after today's report, we may not be bringing interest rates down as soon as people think. The interest rate cycle is still impacting stocks, and that's why we've got winners and losers, right? Then you can throw the dollar in there as another sort of factor, and then you got innovation. Okay. But right now, there's enough participation. Yes, there are a handful of stocks that are responsible for the S&P, outsized proportion of that. But if you look at equal weighted tech, it has a trend score of plus 10. And on a relative trend score basis, it's plus 10. So there's plenty of stocks outside of those Magnificent Seven that are working. And you can see that in financials, industrials as well. There are plenty of stocks. And we don't have enough evidence yet to suggest that we should be really going out and getting aggressive on the short side. I've got composite models that I follow. I don't know if you guys have seen my work. Occasionally I'll post some of those. But, we've had one composite model where there's 10 components, one triggered, a few weeks ago. But, you need to see 50% of those trigger. We've got another composite model that's at 0. So nothing's triggering from the breadth side to suggest that, all right, well, we're going to have a meaningful drawdown. Now, that doesn't mean we can't get a correction. Right. There's been plenty of times throughout history where the market just corrects when breadth was strong. And
by the way, that's the camp I'm in. I don't think the market's going to crash. I don't think this is 1987. This is where the fungus tends to grow in this sort of environment. February, after the best 3-month period, first quarter of an election year, rotation into defensives, which is something we haven't seen. I couldn't tell you the last time we saw it. It's been that long. This is what we've been looking for. Look at the dollar this morning, for example. Dollar rolled over yesterday. You got these rippers and all these currencies, gave it all back this morning like it didn't even happen. Those are the types of things you see before corrections.
Yeah. And look, you can have massive rotations. I know, JC, I've seen you writing about it. Under the surface, you can have massive rotations that take place. Let me give you an example. Okay. In 1996, the S&P corrected 7.64% into a July low in 96. Okay. You know how much technology was down? 20%. You know how much semiconductors were down? 38%. You know how much semiconductor equipment stocks were down? 68%.
Wow.
Can you imagine what people would be saying on Twitter today if we had a 7% correction in the S&P and semiconductors were down 38 and 68%?
But then, hold on. But then, Dean, what were the sectors that did so great after that?
Well, they came right back.
Yeah.
Exactly. Now look, semis did bounce around a little bit before they really took off in 98, but you had other sectors that picked up the slack. You had financials, even consumer staples back then picked up the slack. So look, will that happen again here? Maybe, maybe not. Who knows? Look, technology, the weighting is significantly larger today than when it was in 95, 96. But the point is people are getting bent out of shape about, small caps are lagging or this group's lagging or whatever. That's natural. That happens in bull markets, right? And especially, like I said, when you still have high interest rates in place, that's going to create winners and losers. And right now with technology, we have an innovation theme, right? I mean, what we're seeing like in technology is pretty crazy. I mean, you guys were just talking about cryptos and blockchain. But, you think about late 90s, it was just one thing, really. It was internet. we've got these rolling innovation cycles where it's like, okay, blockchain. All right. Well, then, COVID happened and everybody's got to move everything to the cloud. Now we got AI. So the amount of innovation cycles that are happening here within technology in the last, 5-10 years, whatever, is truly amazing. And that's why tech is outperforming. And that's why tech will probably continue to outperform. Look, will we get to a point where valuations get just so insane that everybody's like, I can't own this anymore? Yeah, probably, right? But that should show up in the charts,
Yeah, you'll see that relative weakness. You'll see rotation into other areas. You'll see it. You see it every time, right?
Yeah, absolutely.
The technology theme is a big one too. AI, it gets called hype a lot, but some of the smartest money managers in the world, these hedge fund managers, will tell you, this is like a new revolution, like .com bubble stuff. These stocks will get repriced, or really, the efficiency or productivity improvements that companies, not just tech companies, but all companies could potentially, recognize from AI. That's just going to add to their bottom line, increase margins, boost earnings, and, drive the market higher over time.
I live in a big engineering community. I live close to Lehigh University, great engineering. So just like a lot of like machinery and stuff, Bethlehem, all sorts of, this is how these people think. And, sitting around having drinks with, some of the older guys, and they're like, dude, AI in the industrials and the machinery and the engineering, like they're like in my ear. I'm like, I get it.
Yeah, no, absolutely. It's a game changer. I mean, I don't know about you guys. I use it every day. Every single day, I'm using ChatGPT.
Let me ask you this. Let's get back to the sentiment, because I'm really fascinated with where you think we are from a sentiment standpoint. It gets tricky because, number one, it's a hard endeavor to quantify sentiment. It's difficult to do. There's nothing clear. Like it's not an exact science. We're usually in the middle, right? Sentiment is much more valuable at extremes. We're, by definition, we're usually not at extremes, so we're kind of like, usually in the middle. To me, from where I see it, I think bigger picture, we're coming off some of the most pessimistic levels of all time, the lows from 22. Maybe in the short term, we've gotten a little more optimistic after a historic rally in equities over the last 3 months. So maybe some give back, kind of send them back towards the middle. Over the next, a month or 6 weeks or so, I think would make sense to me. That's how I see it. What about yourself?
Yeah, look, I mean, sentiment's going to follow price, right? The more price goes up, the higher all these sentiment surveys will get. The message from put calls, it's gotten a little muddy in my opinion, just because, when you went to zero commission trading and all that, and there's COVID, all these new traders that came in. So it's a little cloudy, the message from put calls, but generally, yes, sentiment's going to follow price up, right? You get to an extreme, then it starts to reverse, and it's going to reverse along with price, and then people panic, they hit the sell button, and the cycle just, continues on, and then you go down, you get pessimistic, and then it reverses. So, look, I would say, yeah, we're in the upper bounds, still kind of pushing higher. So in my opinion, it's not, it's not a clear sell signal or anything of that nature. I mean, look, it's a precondition. It's like valuation. Sentiment's a precondition. Something typically sets it off. There's some sort of event where like, okay, here we are, everybody's bullish, stocks are all going up, and then something hits the tape, some sort of news,
banking crisis.
Exactly. And then we get the correction, and it starts all over again. That's
and then of course everybody knew it. Oh, of course we correct in February. It's traditionally such a bad month. They tell you that after the fact, right? We're here telling you first before it happens.
Exactly. So
and then Dean, what about those? Let's finish up with these breath thrusts. You guys do a bunch of breath work. I've noticed over the years, a huge breath thrust coming in December, right? By our work, we while that might be early cycle behavior, like business cycle, 4-year cycle stuff, and that tends to happen early on in those cycles. In the short term, tends to be exhaustive, tends to lead to some short-term corrective action, which we've seen, obviously. How do you feel about those breath thrusts in December?
Yeah, look, it's pretty typical. Look, again, whether it's a gross scale correction or you're coming out of a bear market with a recession, you get the breath thrust. everything goes up, and then you get a little bit of a hangover, and right now I would say we're in that hangover stage. We've done a couple of studies in the last week that suggest things just cool off. Nothing that suggests a massive correction is coming, but things cool off. Here's a cool study I did. All right, so the RSI, right, relative strength index, from the lows in October, right, it cycled from below 30 to above 70 on November the 20th. We then proceeded to tack on 7% from November 20th to January 20th. So 2 months later, right? I went and isolated every single time that you've done that in history. Okay. And there's like 19 times in history where you've gone from 30 to 70 and you added 7% on. That suggests that you get some sort of cooling off in price, right? For about a month, you just kind of cool down. Year later, you're up 89% of the time. Okay. That's going all the way back to the 1928. Jason did a recent study. We've got a new.
No, but isn't the market always up 12 months later, like 70-something% of the time?
Yeah.
So is that really that helpful?
Yeah, well, it is. I mean, 89% is on an annual basis is pretty good. And then we look at whether it's significant. So we look at that 1 year return, right, relative to any random time and determine whether it's significant or not. So yeah, I mean, look, you're going to have that natural drift a year later. But anyway, we've got a cool new correlation tool, and Jason did a study this week, looked at what has happened from the October low through January 26th. That suggests a cooling off of prices.
October low, what year?
This year. So October
23
through January 26 of 24. What this correlation tool can do, it can look at those dates, go back in history and find any other correlation. And I think he used like 90%. So we're looking at patterns that have a 90% correlation to that most recent pattern. And that suggested.
And the pattern being just this relentless ripper.
Yeah. The relentless ripper from, again, October through Jan 26.
Yeah.
We can correlate that, look at every single time that's happened in history. And then what is the outlook? Well, the outlook suggested a cooling off in prices over the next month and then a resumption of the trend. So again, none of this is suggestive of some imminent massive correction. It's just saying, hey, we need to cool off. Let's, that'll bring sentiment back down to more reasonable levels, right? Because everybody is, as soon as you get a couple big down days and people worry about their profits they've had over the last 3 months, 4 months, sentiment will back off quickly, and then that'll reset the bull market and we'll move higher.
So buy that dip into March or April, St. Patrick's Day, have a few pints and buy some stocks.
There you go. Wait for the dip. And you can see it. I mean, if you guys, I don't know who y'all follow on Twitter, but there's a great guy, AMZN, and if you don't follow him. This guy is really good and puts out some quality stuff.
What's it?
ASYM trading, I don't know what it's short for, but anyway, follow this guy. And he mentioned it this week. He's like, look, I'm getting this week, I've gotten stopped out of everything, and so, again, that's just telling you probably that everything's going to cool off. Doesn't mean there's not going to be winners. Doesn't mean, there's not going to be losers. But generally speaking, at this point forward, you probably got to be careful. You probably need to tighten your stops here for the next, probably month or so. I
don't disagree. Appreciate it, Dean.
Yeah.
Oh, Canes, baby, let's go.
Yeah, absolutely. Well, I'm lucky because I went to the University of Georgia. I can cheer for Georgia when they're winning, and if Miami's winning, I can cheer for them. Right?
You guys are in the SEC, so we'll both root against Alabama. How's that? Deal?
There you go.
I like
it.
All
right, thanks a lot, Dean.
Thanks, Dean.
Yeah, appreciate it, guys. Good seeing it.
Man, a lot
like
of
a good college football conversation,
Yeah.
These Northeasterners, they just don't understand.
We don't.
Shout out to the Southern folk out there. You guys get it. You get it. These New Yorkers, they don't know.
All righty. Let's talk about some headlines. Got a lot going on in headline land. Let's look at what's moving here today. A lot of things.
Meta. Moving. Holy shit.
Where's my
holy shit.
What are your earnings here?
All right. $50 billion in market cap in like a second for Meta.
I was so excited to listen to the Apple call. I completely missed the Meta call, and that's clearly what I should have listened to because this was the call to be at. I did read the transcript though. Holy moly! Earnings per share blew it out of the water. Sales blew it out of the water. It was such a good quarter that they're doing something they've never done before, and they're returning money to shareholders via a dividend.
Wow.
50 cent per share dividend, also increased their buyback by $50 billion. This all comes after their what was last year, the year of efficiency. That's what they called it.
Yes.
Cost cutting across the board, operating margins up a ton off of that. They laid off 20,000 people last year.
Yeah.
So
Hold on. Can we just rewind for just a second?
Yeah.
So you're all excited about a 50-cent dividend on a $450 stock?
Yes, it's 50 cent paid quarterly. So it comes out to
wow.
0.5%, which is they're just trying to right size it with their peers like Apple and Microsoft.
So it's $2 on a $450 stock.
Yeah.
It's about it comes out to literally like 0.5%. And that's where they want it. That's
How do you feel
Apple,
about that, dividend expert? That sounds about right to me as somebody who knows nothing.
Yeah. I mean, look, NVIDIA's dividend is 0.03% or something right now.
But they've raised it for how many years? Like 13, 14 years in a row?
They can't keep up with their stock price. But the bigger point here is that Meta has become an absolute monster. Their cash balance increased by $25 billion year over year.
Is that all?
Money. They could pay a bigger dividend in the future. Like plenty of money there. So these companies are just, it's crazy. It's really crazy. And good job, Spencer, reading the buyback too, because that to me is more important than the dividend. Dividend looks cool. Everybody's going to talk about it. It'll get them included in some dividend funds and stuff. But the buyback, I would love to see these companies just, beef up their buyback so big. All of these Mag 7s, just buy back stock like animals. That's the best thing that they could do right now, I think.
One of the reasons I like these calls is they're a good way to gauge sentiment or gauge where the company's head is at, right? Mark Zuckerberg, do you want to guess how many times he said the word Facebook in his remarks yesterday?
Zero times. Zero.
It was actually 2.
Right.
It was 2 times. But the entire thing, or 95% of his remarks, were about AI. Basically, the entire thing. It was all about AI. That's where their focus is, and of course,
you got to give the people what they want,
and the metaverse, AI in the metaverse.
So his lemmings that were training him before the call made sure to tell him, keep saying AI. Make sure you probably had like a minimum. You must.
But it wasn't like he was saying nonsense. Like they've got models like.
Hold on. So in college, we had to give a presentation in business class senior year. And like we had like an Indian lady as the professor, and she had like a very thick accent. So we did the little game where you have to say a certain word, and then we had somebody in the back like raising his hand, counting for us. Right? We had to say meow like I think 12 times or something throughout the presentation. He was in the back counting.
What is this, Super Troopers?
I feel like Super Troopers. So I feel like they had that, right? Like Zuck had like somebody in the back going 1, 2, you know what I mean?
No, leave this guy alone because are other executives doing that and talking about AI when maybe they shouldn't be? Yes. For sure. Zuckerberg, this is the same guy that we were all laughing at just a few years ago for changing his company's name to Metaverse. He's been talking about AI forever. Now they're finally deploying it and they're using it and they're making money off it. Good for them. This is a real AI play, unlike some others. And Zuckerberg was way ahead of it. Maybe outside of Jensen Huang, he's been the most obnoxious about it. Go back 5-10 years. Also, speaking of Jensen Huang, he overshadows a lot of what some of these great CEOs have done over the past year. Mark Zuckerberg, easy runner-up for CEO of the year in 2023. Like, what a comeback for this company. Good for them.
It's amazing what laying off 20,000 people can do to your bottom line, right? It's not rocket science there.
Great business.
Of note, their reality labs, which is that's their VR unit. I didn't realize. Holy cow! Revenue for that topped $1 billion last quarter, though they're still wildly unprofitable in their VR stuff. But yeah, I mean,
they had $1 billion in revenues from these headsets.
Yeah, isn't that insane?
See, Yeah, that actually really surprises me. And my initial thought there would be, don't even be in that business because you're not going to win. Have you seen this Vision Pro thing this morning?
I mean, I see it every day. There's someone else with
I
a
like
new
the
Vision.
vacuum cleaner thing.
Dude, it's ridiculous. I'm sorry. Meta's great. They're not going to compete with Apple. They're not going to build a better headset than Apple.
I want one so bad, dude.
I do too. 3,500. You going to do it?
Like if I go online and buy it, like I can get it tomorrow. Like is it one
No.
of those, or am I like on a
No.
waiting list?
You could pay $6 grand on eBay right now. I was looking this morning, but
6 large.
yeah, because it's all backed up.
Let's see how some of my shorts do before the end of the day. We'll see what happens.
Here's the thing with something like that. As much as I want to play with the new toy, it's super cool. I'm hearing it's heavy. It is very expensive, and it's going to be 10 times better in a year or two, and 10 times cheaper too. We've seen this story a million
It's heavy,
times.
like on the neck.
Yeah.
Yeah, I heard you can't really wear it for more than like an hour. So that's not cool.
I like the pictures of Marty McFly, like in Back to the Future. Is it Back to the Future 2?
Two. Yeah. Yes.
Yeah.
The one where he goes forward.
Yeah.
Yeah.
Right. Duh.
Before we move,
Obviously.
Okay, funny guys. Before we move on from this just epic earnings beat from Meta, I just want to say what a great earnings report this was for Snapchat.
Oh.
Linson's buying 2. He got 1 to save and not open, and 1 to open.
Tell him to share. Why is he not going to open it?
He's saving it as a collectible.
Oh, he's crazy. That's pretty cool. Snapchat me.
Wait,
So they got earnings next week.
I was going to say Snap was not on the calendar.
They got earnings next week. Look,
But look at that volume profile.
what doesn't get talked about a lot with this AI jazz is that you're not going to see the results as a consumer or customer a lot. And it's not even going to be on the income statement on the top line, those results a lot of time, right? So like with Meta, we're talking about all these layoffs and stuff. That's AI, right? You're going to see that just in reduced expenses. With Snapchat and Meta, they're using AI to power their advertisements, right? And they're already the best in the business at that. And I think, these two are very, very similar in that way. Snap is already employing AI in their business, and they're selling like a new subscription service, which is exciting. I think the read here, we're up 5-6% this morning. I think the read here is very, very positive for Snapchat as it coils at the upper bounds of this beautiful base.
Speaking of turnarounds, holy moly. Snapchat was dead in the water for a while.
There's something here with this company. I'm excited about this one.
Doesn't it just look like social, the ETF?
A lot of things do, though.
Probably.
Right? Like ARC too. Looks like the IPO index too.
Can we throw up slide 2 here? I don't know if you guys saw this. It was mentioned in the chat. Slide 2. Ready? This is for you.
Oh,
This is the latest from the geniuses over at The Economist.
Hey, I mean, when Mark Zuckerberg was saying last night does not counteract this cover. It's like the social network as we know them was a thing of like Web 2.0, right?
Yeah. But what about the glacier metaphor situation they got going on here?
I don't get it.
I also don't get it. But no, I mean, it's very possible that like AI does revolutionize how we interact on the internet. So I don't know what's wrong with this cover, frankly.
I think not only is Meta or Facebook, ready for it and prepared, but like they're expecting it, right?
Yeah, of course they are.
Away for years.
Oh
yeah. I don't want to get too philosophical, but I have it in my head, and I think it's topical. I've been reading the new Chris Dixon book. Highly recommend it. And
Venture capital guy.
I'm sorry?
Venture capital guy, right?
Venture capital guy who's been right a lot over the last several decades. Internet 2.0, just got a lot of things right. And one of the things that he's really pounding the table on is this, because of the AI, these deep fake videos where right now the only thing we know is true is things that we watch on video on social media. We can actually watch it. We can see it.
Yeah.
That's starting to no longer be true. And 2 or 3 years from now, it definitely won't be true. You won't be able to trust video at all. So the only way to verify that this is a real video from a real person is on the blockchain. So talking about, the blockchain being real technology that's being used, something as simple as we're no longer going to be able to trust videos. We're already getting to that point, but for sure in the next couple of years, we're no longer going to be able to trust pictures and videos like we have before without verification on the blockchain.
Great.
So something to think about. Again, I don't want to go down that rabbit hole.
My parents just figured out iPhones. Now I'm going to have to teach them the blockchain too. Wonderful.
But it's fascinating. I really highly recommend it. This is like above my pay grade, obviously, with the types of stuff that I do for a living. But it really is interesting. So what's the name of the book? I just started reading it yesterday. It's like what is it?
I don't know. There's going to be some big changes, some just huge innovations that hit everyday life in the next 5-10 years with this AI stuff. I feel like we stagnated a while after the .com boom, innovation wise. Of course, there was some cool stuff that kind of trickled in, but this is a whole new world. This headset, all these things. I've seen videos already that I thought were real, and people are like, "No, that's
slide two.
Slide two. Read, write, own is what the chat is saying.
Slide two.
JC.
Go to slide two. Slide two.
Read, write, own. Okay.
Started reading it last night.
All right, I'll check this out. Can we talk about Apple here for a second?
Highly recommend, guys. I'm halfway through chapter 1. It's a must read.
Yeah.
That's good, man. All right. Apple. Mostly good. A couple of things not to like though, which explains the reaction for Apple. The things that the street is harping on this morning were the weak sales in China. China sales were a little under $21 billion last quarter versus a $23.5 billion estimate. That's one point of contention. The other point of contention is the guidance, the iPhone sales guidance specifically for the current quarter compared to the same period a year ago. iPhone sales guidance will be about $5 billion less than they were in the same quarter last year. Mostly because remember they had that artificial bump in iPhone sales because there was like some factory stuff and COVID supply chain. So they had a huge quarter last year, and so on a year-over-year basis, it's not going to be good. So the guidance was light, China was light, and that's kind of overshadowed in the fact that everything else was kind of okay. So
here's the thing. Here's the long-term situation with Apple. This company is going to be more than okay and going to keep growing to the moon as long as they continue to dominate consumers' attention, right? So the next big device that everybody's using after the iPhone, they need to keep owning, right? To maintain this whole ecosystem thing that they have. I thought the watch was going to be something that we were all going to be wearing very soon. It's kind of taking a while. I thought there'd be health benefits there, and you would pretty much have to get one, right? It'd be irresponsible not to. Maybe it's this Vision Pro, but the point is they got two in the wings between the headset and the watch that could be that next thing after the iPhone. So I think they're very well positioned to continue to dominate and keep us all in their world. And I think that's really what matters at the end of the day about this company.
Yeah.
No? Too simple?
No. I mean, I have most people I know my age have a watch. Actually, have the Apple Watch. So I thought
new multi-month lows this morning for Apple. What if Apple loses those early 22 highs, Strazza?
Back in the box. Messy stuff. It's
back in the box. Could get nasty.
Listen, the valuation here is very high for how they're growing right now today, right? And
valuation.
Yeah, it is.
They're isn't it like always high?
What was Meta's revenue growth year over year? 30% or something, Spencer? What was Apple's? 3%?
Something crazy like that.
Wow. So Meta 30%, Apple 3% revenue growth.
That's my point. And the PE multiples up until I think recently, Apple was more expensive. So riddle me that.
It's a little bit different.
Multiples for breakfast.
It's a little bit different because Apple's producing hardware, right? And that's the bulk of their revenue. So, they had
it's money coming in. You need one's growing at 30%, the other one's growing at 3%. I don't care how they get there.
I don't know anything about fundamentals, but sounds right to me.
All right.
To keep it real simple around here. My fundamental.
What? Okay, let's keep it simple. Let's keep it simple. Line go up in Amazon. Amazon good quarter, line go up. That's as simple as I can make it. EPS beat, sales beat, AWS growth was in line with estimates. Guidance was in line with estimates. So line go up for Amazon this morning.
When do these guys pay a dividend? And what's the buyback here?
Don't they have to make money to pay a dividend?
Bro, they've been making money for a long, long time.
Yeah, but
Jason-
but by accident, right? Isn't it one of those things where they're making money like not on
No,
purpose?
that was 10
Like
years.
they're so good that no matter what they do, they can't lose money.
They turned the corner. The thing with all these companies is they just spend a shit ton, right? Trying to get on the next thing. That's been the model.
Yeah. When do they pay a dividend? Good question. I don't know.
Point is, all these big cap techs, they got the money to pay a dividend now, or at least buy back a ton of stock, and they should all be doing it.
Maybe they will. I mean, they all kind of said the same thing as far as spending the last year cutting costs. That message was across the board last night. Amazon, Apple, Facebook, or Meta. They all said that. So now maybe they follow suit.
You know how long Microsoft has been paying a dividend for?
No.
Any guesses?
32.
2000 and I don't know, 2, 1, 3.
2003. So over 20 years, and Apple's over 10 years now. It happened when Icon was in there, and that was around 2012, right after Steve Jobs died.
Uncle
You
Carl.
got that right? Yeah. So Apple's been paying it for more than 10 years. Microsoft more than 20. You're going to see the rest of these guys, Google, Meta, Amazon, they're all going to come around. They're going to start paying something.
Dude, I was at Ginger Man the day when Steve Jobs died. I was at Ginger Man as a bar
In Greenwich?
in the 30s.
In Greenwich?
No, nobody goes there.
People go there. I used to go all the time.
No, this is in New York City. You may have heard of it. It's a big city.
There's one on Greenwich Avenue. Lovely.
I know. I've been there. Interactive Brokers took me there, trying to pitch me to open an account there. Does that sound right?
Yeah. We always had our happy hours there.
That sounds right.
Yeah.
So we're there, and it's like, a lot of familiar faces, Josh and Batnick and Fahmy, and like this is like back in the day. It's like what, 2012, something like that, 2013. And I remember we were all in the bar, and then all of a sudden, news hit that he died, and like these are all like financial journalists and traders, and everyone's like
crazy.
As sad as it is that he passed, it was kind of like fascinating to watch, like the financial social community all in one bar gathered together. Like, wow, Steve Jobs is, We were also all together in another situation when Instagram got bought out for $1 billion. And it was the same thing. Instagram bought it out for $1 billion.
That was a huge number back then. Remember, people were like, this is crazy.
$1 billion, yeah, because
it was like
Fred
a 3-year
Wilson.
company.
Fred Wilson had just written a letter to the board at Twitter.
Yeah.
Here are 10 reasons why Twitter should buy Instagram for $100 million.
Oh.
And he got laughed out of the room. And
Can you imagine?
Just after that, they got bought out for $1 billion. Yeah.
Best acquisition of all time, or
YouTube? No, YouTube. YouTube.
They're 1 and 2 though. They're 1 and 2.
Yeah.
Easy.
What about like DoubleClick for Google? That was a big one.
Oh, that was a good one too. That's their whole business. So, speaking of Instagram, that also got a paltry 2 mentions in Mark Zuckerberg's opening remarks last night. So, yeah.
What about the WhatsApp?
That got like 4 or 5 mentions, a couple more. Yeah.
I got yelled at again yesterday for never checking my WhatsApp.
I know, it's because we're Americans, man.
I know. That's what I told them.
That home country bias. Like, we're just not checking our WhatsApp.
Yeah. Like I went
as my mom calls it, the what's up. Just check. I get the messages on the what's up.
All right.
Went to Asia for a month. It was my most used app by far. Got home and deleted it. I don't use it anymore. It's too much.
All right. Let's rip through a couple more of these. I want to talk about this Decker. Since this came up maybe last week or the week before, I don't remember. We were talking about the shoes. And holy moly.
Is it the Hey Dudes? Is it the Hey Dudes?
The Upper Decker.
It's the oh gosh. Someone help me out here. Wait.
Okay.
Well, it's Uggs. Uggs is the driver here, but there's the other one too.
There's the other one.
Someone help me out in the chat. I know I have it somewhere in my notes, but I'm not going to look. Hokas. Thank you, Chris. Hoka. Yeah. Anyway, Decker's outdoor blowing out of the water here last night, crushing the earnings, crushing the revenue, crushing the guidance. And do we have a chart for? I don't know if we do, but
the chart looks ridiculous.
The chart goes from the lower left to the upper right. That's all you need to know.
Yeah.
Some of these shoe companies, it's just wild. And I will say, I love Uggs. They're fantastic, but it's so hot down here. My feet are sweating all the time. I don't need them. If I lived up by you guys, I'd be rocking Uggs like all day. They're the most comfortable thing you can put on your feet.
Some of the shoe companies doing this. Skechers is not doing it this morning.
What are you laughing at? What's that
Skechers.
for? You have a pair of Uggs. No comment from JC.
Me? A pair of Uggs?
Yeah, you
I
got
don't have a pair of Uggs.
You wear Uggs.
I have Ugg slippers. The great in the
I
winter.
might have Ugg slippers. I don't know if they're Uggs or not.
I used to have Uggs dress shoes. You didn't even know how comfortable I was walking around in my dress shoes.
I'll probably have Uggs. I'll have these Ugg slippers probably for like the rest of my life. They're so because I only wear them like 3 months out of the year, and
they definitely don't smell at all.
No, you can't wear them forever, dude. That is gross.
That is gross.
What?
You need new pairs like every year or two.
Yeah, well, you're nasty feet, man. No,
Stink.
No, I have to take them off after a while because my feet get hot. In any case, Skechers is not doing what
Spencer's sweaty feet in my head. That's an image I can't get out of my head.
I'm barefoot at the moment, if you must know.
Oh, it's even worse.
Oh, hey, dude, is Crocs. I get these two confused all the time.
Yeah. Skechers missed on their sales, and the growth wasn't quite what the Decker's growth was. So,
JC, how many years till you get your first pair of Velcro sneakers? We getting close yet?
Oh yeah,
we got to be getting close. 3 kids.
I got some like old Jordans and stuff like Jordan 4s that got a little Velcro action going.
No,
you know,
I'm talking Skechers hardcore. I want like 3 Velcros, not just one at the time.
I don't know. I'm not there yet.
All right.
Yeah.
Do you guys want to talk energy for a second? We had Exxon Chevron this morning. I think we have those charts. Exxon's report was mixed. Top line missed, bottom line beat. Actually, same thing with Chevron for that matter. They both missed on the top line, beat on the bottom line.
I love that they do it the same day.
Chevron raised their dividend. Chevron raised their dividend, by the way.
They didn't both. Exxon didn't.
Exxon, I don't see that. Chevron raised their dividend by from 151 per share to 163 per share.
They typically raise the same quarter every year, so maybe this just isn't Exxon's quarter. I would imagine they're going to be raising as well.
Yeah, maybe.
Okay, good. I mean, I don't have much to say about energy. I kind of looked for opportunities to get long. I told you guys what happened. I didn't love really any of the vehicles, particularly not to use options with. There's some weird stuff out there. Like, there are leaders making new highs. They tend to be smaller in market cap, not optimal, not
look at NX. Look at Next Energy again today, just ripping this thing.
Uranium is a thing. It's a secular bull market. It's going to go on and on and on. And these stocks, it feels like they're up like every week.
Because they are.
I'm so glad. I'm so glad I listen. Yeah. Ian was like, be patient, man. Be patient. I was like, okay. Thank you, Ian, for telling me to be patient.
Because that's how these patterns work, right? Like if we have the UEC, throw it up. This is like a 20-year base, right? It's just now resolving. It's just starting. And it could be really messy. And there's going to be drawdowns along the way. Like we talked about with crypto, they're going to be big drawdowns too. These are uranium stocks. But these trends are hardcore right now.
Throw slide 2 up there, Spencer.
And the leadership has been there for years now. Well, look at this thing. If that is completed, right?
Yeah.
How many targets do we hit?
Ooh, really in the chat.
Where do you sell?
Since 5.
UEC, I love UEC. NXE is a great one too. CCJ is a good one. There's a lot of good options out there, and I think the ETFs themselves are decent options for this kind of a group.
When they're all good,
as soon as NXE broke out above 5, that was the entry.
Yeah.
Nice trade there. Who somebody just
that was Billy Cunningham in the chat.
All right, shout out Billy. Shout out.
Hey,
all right.
Okay.
Can I bring Fonz on?
Please.
Yeah.
Fonz, you ready? I hope so. He's coming on.
Can I just
be in the house?
How's it going, guys?
Love you, Fonz. What's up? Happy Friday. Before we jump in to Fonz's segment, JC, you'll really enjoy this. Did you do the non-farms, Spencer? Because I got something on this.
Totally missed that. It was a huge beat, by the way, on the jobs number this morning. The economists, whoever they were expecting job growth of 185,000 jobs last quarter. It was more like 353,000. So, yeah. We'll wait for the revisions next month, but for the moment, it's a big beat. Unemployment
Hold on,
rate.
the Economist got it very wrong. I can't believe it.
But
The
stop. These numbers are ridiculous. Did you see what else was huge?
I want to
You
know
see
what
this
the farm
revision?
payrolls are.
The unemployment
How's
the unemployment rate ticked down from 3.8 to 3.7%. They got that one right. So yeah. What else was big?
Listen to this. The change for December was revised up by 117,000 from 216,000 to 333,000. That's more than 50% of the jobs. They're not even close. Like, these revisions are crazy.
This is what I've been wondering, because there's every time there's layoffs in tech, they get all the headlines, right? Because they're large numbers and it's tech and everyone knows about them, right? But like, I've been wondering, just what about everywhere else? And clearly we're seeing that tech and tech and media are outliers. There are always going to be outlier industries, but by and large, jobs are being added. People are getting hired.
Great point, Spencer.
So
it's that simple. The economy is absolutely eating these tech layoffs.
Yeah.
Like, what else you got?
I don't know. Shout out Alfonso. Speaking of new jobs, we were talking about Ferrari yesterday. Alfonso popped into the chat and said Ferrari is getting Lewis Hamilton, and we thought, oh, that'd be funny if they did. And then turns out he was just reading the news because they did. So,
really? Okay. Yeah. I thought so. I didn't think he would speculate with our news.
No.
Fonz, how'd you like New York last week? You have a good time?
It was great. I love New York, man. I'm in love with you. What
was your favorite part of the New York experience?
Meet our clients, hang out with you guys, the presentations. That's why we're here. At the end of the day, looking at charts. Definitely the first pizza.
First pizza, Prince Street.
Definitely.
Yeah.
And I have to include with Louis, we went to the exchange with Jay Woods, and it was a great experience too. So very grateful for that, and very good memories.
Good.
I'm
glad.
How was the omakase? Make JC jealous.
Oh yeah,
great.
How was this?
It was great. JC and Spencer missed that, but it was great.
All right.
My favorite part was when Alfonso and was it Brandon? I forget who. We walked around the corner from the hotel to a bar, and I made every wrong turn possible to get us to this bar.
The last night, right?
Yes.
Yeah, that was fun.
Every option, I made the wrong decision. Every turn.
My favorite part was watching just how much fun Louis and Alfonso were having.
All
that
right.
was my favorite part.
All right.
We spent
Can we talk about these markets? Fonz, what's on your mind with the Hall of Famers? Anything good? What stands out? Talk to me.
I in New York, we talk a lot about industry groups and industrials, how to divide and go deep into these sectors. So today I bring some industry groups within industrials that I think they are important, and I think it is helpful for us to take a look, because I don't know, a lot of the media and some journalists talking just about the Magnificent Seven and technology, how about the 2021 highs and making new all-time highs. That's a lie. If you go and take a look at all the industrials, subgroups, or have performed very, very well. So how
What's
about
the last one? Truckers?
Sorry.
Truckers are making new highs, but industrial suppliers making new all-time highs. Let's take a look at some of these charts. So let's do it fast and very quickly. Large cap industrials making new all-time highs.
Literally yesterday, new all-time highs.
Mid cap industrials, same story, pressing against new all-time highs above the 2021 highs.
Yeah.
Small cap industrial, similar picture, looking great. A lot of strength in this area. And let's start to dig in some subgroups. Aerospace and defense above the pre-COVID highs. Short-term retest pulling back to 120. it's holding right now above that level. So that's the line in the sand. Transportation index looking good, pressing against the upper bound of that range. Railroads making new 52-week highs. Trucking index right there below and coiling in a good way, in my opinion. Logical level to digest some gains to continue its path higher. Commercial vehicles and trucks index. This is another index. This has, I will tell you now how many components. It has over like 20 components, this index. So making new all-time highs. Marine transportation looking great too. Pressing against those former high from 2022, carving out like a nice base. Let's see.
A lot of these stocks have been making new highs this week, these shippers.
No, they look great. They look great. And I think this is a great index to take a look and have it in mind, because we don't have like an ETF, like a good ETF. So I think this is a good representation of that. Industrial engineering index making new all-time highs. Industrial machinery making new all-time highs. Construction and materials making new all-time highs above the 2020 highs.
Especially as you go down the cap scale, some of these, building materials companies, they've been ripping for some time.
Yeah, I'm glad you included this one. This has been like the leader within, and a lot of, depending on where you're looking, sometimes they're categorized as materials, sometimes they're industrials. I consider these building materials companies industrials.
They're definitely, they are, very diversified sector. So they're mostly like industrial stocks. So let's take a look at this, building materials, same picture, same logic behind. Industrial suppliers, here's the chart. This is probably, the best index. There are a lot of, I think, how many components, Fast, DN, OW, MSM,
Cisco.
AAT. Yeah, definitely. So this one looks great. Industrials, goods and services, pressing against the upper ends of this range, looking great. And I think that's all I have from industrials. So
nice.
So how's this?
I like the breakdown in the industry groups. I think that people aren't doing that. I think great job, Alphonse.
So
because I think industrials are not given like enough credit. At the end of the day, it's the most of the credit it's going to technology, the Magnificent Seven. So I think industrial is a very, very important group to take a look. And if we can divide it by subgroups, it's very important too.
So this just took us 5 minutes, and I know we just did it at the industry group level. You could drill down one more layer to the individual components, right? But clear as day, we just assessed the market internals or the sector internals for industrials. They're all either already broken out above their prior cycle highs, or just like shown here with the industrial goods index right there, knocking on the door of a breakout, like almost every single one. So that tells you, I think, all you need to know about industrials as a sector right now. The strength is pervasive in the entire sector. And you even went through the size indexes. So mid caps, small caps, no different. You go look at small cap tech, it doesn't look as good as small cap industrials. So you even have that strength down the cap scale more than any other sector. So great stuff. Great stuff, Fonz.
Awesome.
Recess?
What? Yeah, recess. Let's go.
What do we got?
I just want everybody to enjoy the weekend. First weekend that we've had without football since the summer.
Sad.
Imagine that. Try to get outside. Even if it's a little chilly out, get a good deep breath of the outside air. It's good for you. That's what I'm going to do this weekend. And try to get outside no matter how cold it is.
If you
All right.
need some sports in your life, just tune in. Pebble Beach Pro-Am. Should be great. Great tournament. A lot of fun.
My recess is Billy freaking Joel, man, out with his first new song since before the iPhone. 2007 was the last time this guy had new music. I had very low expectations, and the song is great, man.
Billy Joel, dude.
He's still got it, man. He's still got it. It's called Turn the Lights. What was it? Turn the Lights Back On, or
right.
yeah, turn the lights back on. Check it out, and he's still got it. Billy Joel, love it.
I can't wait to go listen.
Spencer's very excited about this Billy Joel.
Oh man, it's because I didn't think it would be a very good song because the guy's in his 70s and a lot of these older guys, their new stuff just isn't good. They kind of lost the magic, but not Billy, man. He still got it.
All right.
That's awesome to hear. On that note, you just reminded me. I watched a pretty cool documentary. I actually didn't even finish. I got to finish it. You know that song where they all got together in like the 80s or 90s, We Are the World or whatever, Michael Jackson, everybody?
Mm-hmm.
Yeah.
There's a documentary about it where all of these just like the greatest musicians of all time are all in the same room singing this song. I got to tell you, maybe it's not the best documentary, but just getting to see the footage from them being in the studio like together, and Bruce is there, and Billy Joel's there. Bob Dylan's not singing because his voice is so bad he doesn't want to fuck it up. It's really good. Go check it out. It's on Netflix. It was hilarious. It's really good.
Love it. Fonz, got anything?
I have to buy like a winter coat for the next time because I was freezing out the first night.
Alfonso's like, that's the first time I see snow. I'm like, what snow? He's like, oh, that yellow stuff over there in the corner.
I said, bring your heaviest coat. He shows up in like a little windbreaker. That was his heaviest coat.
Alfonso's eating the yellow snow. I'm like, no, Fonz, no.
Anyway. All right.
Throw up the slide one more time. The Chris Dixon book. Read, write, own, Building the Next Era of the Internet. Chris Dixon. I'm halfway through chapter 1. Must read. It's interesting. Gives you good perspective, especially for knuckleheads like us who are not experts in this. Gives us some pretty good insight. Helps with perspective, I think.
I'll check this out.
As will I. That's a wrap. Everyone, go make some money. Have a great weekend, and we'll see you next week.
Adios.
Hey, guys.
Turn the lights back on.
Run it. I can't take no loss. I don't even know what it costs.